Hello guys, welcome back to my channel. Continuing with accounting equation. As I already told you, accounting equation is assets is equals to liability plus capital based on dual concept, that is debit should always be is equals to the credit. Now in this case, again we are having same base. Akhil started business with cash 80,000 and the bank balance 40,000. So the cash investment in the business is of rupees 80,000 and bank balance 40,000. Who is contributing this total balance? That is the owner. So the owner investment will become total of rupees 1,20,000 here. Now the concept talks about income. First point is commission received. Second point is commission received rupees 30,000. Here you are receiving something, that means your cash balance is increasing with rupees 30,000, and when the cash balance is received, equivalent amount would be added to capital because income would always be added to your capital. As discussed in the last video that expenses are deducted from the capital, here with the receive in the income, the capital of the owner would also increase with the equivalent amount, that is 30,000. So the cash balance is added, no change in bank balance, no change in liability, and then capital is also added. So debit is again equals to the credit. Now the third case where he says accrued commission of 20,000. When commission was received, cash was added and capital was added. Now here you have not received commission of rupees 20,000, but commission was your income which you have not received. That means cash balance is not increasing, bank balance is not increasing, but it is showing there is some person from whom my commission is due. Because that person becomes my debtor over here, it will appear on which side, that is asset side. If the commission is received, then it goes to cash or bank balance. If it is not received, then it will become your asset with the equivalent amount of rupees 20,000 here. So 20,000 added in the capital and 20,000 added as an asset in your accrued commission. Now, fourth point here is when he says commission is pre-received with rupees 10,000. You are receiving a cash which is actually not income of the month. That is not for that month. This 10,000 is freely received. That means it is belonging to the next month, for which I have not done my job. The job is still to be done, but income is already received. So that income we cannot add to the capital balance. That becomes my liability. Why liability? Because I have still to do the job. So pre-received commission becomes my liability here with rupees 10,000 and no change in the capital for pre-received commission. So the point we gained over here is income is added to the capital and cash when received. If it is accrued income, then it becomes asset and capital. If it is pre-received income, then cash balance would increase along with your liability would also increase. Now let's see accounting equation tallies or not. Here is the total of rupees 1,20,000. Here it remains 40,000. Here again it is 20,000 as there was no change, and here it is 10,000, and now on this side we have 150 and 1,70,000. So what's the total here? 180, and what's the total here? 1,80,000. So 1,80,000 equates with 1,80,000. My accounting equation tallies. So debit is equals to the credit. Now this is all for the class of today. Thank you. Like, share, subscribe my channel. Accountitude keeps going.